Wall Street paring the big gains it had out of the gate on Monday. The Dow now down, up rather, about 250 points. It had been up more than 440 points earlier. Joining us to sort out the market is Santosh Rao. He is head of research at Manhattan Venture Partners. Welcome back, Santosh.
Thank you.
So it looks like it's risk on today. What do you make of the quality of the rally we're seeing? I've noticed the defensive stocks are taking a seat back.
Yes, I think what you're seeing is the technology stocks are back in the game. There's going to be some kind of rotation back with the risk-on environment back. So I think you'll see some kind of rotation, but it's still too early to say. I mean, this is just an agreement to have further talks. So nothing has been signed yet, but it's a step in the right direction. Few things have been pushed out. That the 25% tariff has been pushed out. They've agreed to stop exporting some medical drugs and all that. So I think those things are good. This is what the government needed. This is what we needed. The agriculture, the farmers are very happy. So I think all that said, so the next 3 months is going to be important. We'll wait and see how the dust settles, but looks like things will move in the right direction because it's in the best interest of both countries to kind of get some kind of an agreement.
Of course, Santosh, you're referring to the temporary trade truce notched out between
Correct.
the U.S. and China over the weekend. Now that we've got that truce for now out of the way, and the Fed luncheon speaker, Fed Chair Jerome Powell last week, is it all clear for a year-end Santa Claus rally, or is that 90-day period you're talking about, U.S.-China? Are we going to get some negative headlines out of that?
So I think it's all clear for a rally. Seasonally, this is a very strong time of the year. And with this Fed out of the way, and not totally out of the way, but saying that they will be less aggressive next year, I think that's a good sign. And the trade talks in the offing, and then hopefully he'll continue and settle something with the Europeans as well. So it'll be back to a good status quo where everything will be in good condition. But one thing is important. There are some structural changes that U.S. wants from China. And I think that's important. They have been cornered quite a bit. So U.S. needs to put the pressure to get what they want. I think right now they have the leverage. So hopefully they will go through and get at least most of what they want from China.
The part that China probably least wants to
Right,
change.
the intellectual property and they're giving away the technology and all that stuff. I think all that hurts the technology companies. So to the extent that they can control that, to the extent that China comes to some kind of an agreement, I think it's good for Amazon, good for Apple, and good for Facebook, all the technology companies.
I was going to ask you about Apple since you cover technology. Apple's up sharply along with the other badly beaten tech stocks. Is it too early to buy Apple given that you've still got 90 days to iron out that any trade agreement?
Yeah, I think Apple will, I think a bottom has been set. I mean, there's no downside risk as such. I think it sold off quite a bit. Quite a bit of risk has been sold off rather. So now I think the upside, of course, we have to wait for the next earnings report. But we'll see. I mean, this is seasonally a strong quarter. All their devices sell well, the Apple Watches and all that. The services are a pretty good part of their business. So there's enough headline to keep Apple in play for the next 3 months.
Despite the reports you got about the XR?
Yeah, I mean, to some extent, that's been priced in. We know all that, the sales have been poor. And the thing is, they're not bad, but Apple has set up such a high bar, so they're competing against themselves. So it's really essentially that. So we'll see where it settles. But right now, I think they just have to continue executing, come up with new features like they do. And let's see what they do on the services side, which is important. Let's see what they do on Internet of Things, autonomous cars and all that. So those are all incremental things where they can add some more firepower to their stock.
And Santosh, you referred earlier to Fed Chair Jerome Powell, the luncheon comments that he gave last week. He's going to be giving some more comments this week before Congress. What are you expecting to hear?
Yes, I think it has been pushed out because of the funeral, but he is going to give. So pretty much he's going to say what it is. I think everyone wants to know whether he's going to be as aggressive as he said. The big issue is, are we at neutral or below neutral or above neutral? I think that's the big confusion. He said we are pretty close to it. So I think that's a good thing. Before we thought he'll continue doing that. So all the signs indicate that he will be, and then he has Trump watching every move of his. So I think that even though he's independent, I'm sure it plays in his mind, you can't go too far away from what Trump wants. So I think that that point will be noted very much. So we'll see, we'll parse every word that he says, and see where he comes out. But I expect a more dovish kind of statement from him, saying that we are where we are, where we want to be. We'll be data dependent, and we'll see how things play out. And if it continues to be soft or something, we'll adjust it. But if it grows, takes off, if the economy takes off, he has to control inflation. So things like that. So I think the data is important. It's not just a straight up, just raise the rates regardless of what happens in the economy. I think he'll be cognizant of all that stuff.
Which is back, I guess you're optimistic to look for the equity markets if he does indeed keep dovish.
Exactly.
All right, thanks a lot, Santosh.
Yeah. Thank you.
Our thanks to Santosh Rao of Manhattan Venture Partners. I'm Fred Katayama, and this is Reuters.